On Thursday, February 22nd, I started my day like I usually do. Wake up, get going, drop out the best of U.S. investors' morning newsletter that Mark puts together, and went about my day. Had no interruptions of anything. And then I had to run to the hardware store just down the road, and I left the house, drove down the road, and noticed I had no cell phone connection. I had no, it just said SOS at the top, so emergency connection or something. Go into the store, thinking nothing of it. Maybe I'm just at it, something happened. Maybe I'm now on network, this, that, and the other. Hour goes by, I still don't have a connection. And I'm like, did we pay the cell phone bill? And I'm like, yeah, we paid the cell phone bill. No connection. I have no connection to my family, no connection to the outside world. I get back, my phone jumps on my network at home, and all of a sudden I have a connection. And all of a sudden these texts start coming through. And my sister-in-law sends us this text and said, At&T is down. Roughly over 74,000 people have no connection. And I all of a sudden go, oh shit, I'm a little freaked out. In this video, I'm going to talk about one of the major cybersecurity companies out there and its recent fall from grace, and should it be the opportunity to buy? And how should we be thinking about the world we go through in the future, and how we go about who we invest in to protect our security, from cyber to personal to physical. Palo Alto Networks is one of the largest, most dominant cybersecurity companies out there. Mostly malware, basic corporate security, this, that, and the other. And they came out with earnings back on the 20th of February. They reported earnings per share normalized at $1.46. They beat by 16 cents. GAAP earnings were $4.89. They beat pretty handily there. And then the revenues were up 3.5 million over expected. Earnings look great. But then they came out during the call and they guided that they expect their sales to slow going into the next quarter. And the stock dropped after hours 20%. What's crazy about this is it came right down to its 20-day simple moving average. Bink, stayed. And then it's moved up, but it's been, topping out a little bit. So I got to thinking about this after my whole total shutdown of my cell phone and my connection to the world. I got to wondering, where are we headed as a world? How will we function? Will we function like we have in the past, or has everything just accelerated and changed? And will we be more vulnerable to bad actors in the future? In my feeling is, yeah, we are. And the At&T fall apart, the 74,000 people who lost connection, the email that came back, I got the other day that said, hey, we're going to give you a day's worth of credit because, we were upgrading something. Really? In this world today, we have, with AI and and cybersecurity, we have become more vulnerable. Think about your daily activity. Right now, you're watching this on YouTube, okay? You're probably, statistically, according to our analytical statistics, you're watching this on your cell phone. Do you think maybe your cell phone is tracking everywhere you go? Do you think maybe your cell phone is listening to everything you say? I mean, think about it. I remember being on Google and I type in, I'm talking, no, it wasn't on Google. I was talking to my wife about something, and that we were thinking about shopping for this product. And about half an hour later, I'm on Amazon, and guess what shows up? That product. I'm on Google, and I see on the side, the AdWords advertisements, I see an advertisement for that product. Are they listening to me? How do they know I was thinking that? Well, the answer is I have Alexa in my house, and Alexa listens to everything. And who owns Alexa? Amazon. Who owns the internet connection between me and Amazon? Are they listening to everything I do? And the answer is yeah. I mean, just from a good actor standpoint, you want to know what your customer really wants. So if you could listen in on a conversation, you would, right? Wouldn't you? Does Apple listen in on us? Of course. You betcha. I mean, they say they don't. Maybe they all say they don't. But the answer is they do. Or they're picking up some ingredient of a piece of what you're saying or doing or where you're going, and they are, they're tracking you. And that to me is the freaky part. Is now not just the good actors, but the bad actors, like China, like Iran, like Russia, like just any bad-hearted person who wants to inflict harm on you because of what you believe in, or what you do, or the color of your skin, or your male or female, or just the fact that you're an American. And because of historical actions that you had nothing to do with, you're a target. So my question is Palo Alto, is it time to buy this stock? Is this a company that, if I'm looking at it from a long-term perspective, is this a company that is going to, from a selfish standpoint, make me a whole lot of money down the road? Is their product and services going to be something that I am so going to have to demand, if directly, if more importantly, indirectly? So for instance, At&T, for instance, was it United Healthcare? If it's my Blue Cross Blue Shield insurance company, are these companies, are they going to more and more demand the products that Palo Alto is asking for? And is this whole 20% drop on aftermarket hours on the 20th an opportunity for you and I to, well, start adding to our portfolios in it? Let's take a look at the charts, and then let's take a look at some of the fundamentals. And then let's ask the question, what is our most famous politician doing, in the next segment?
So I'll be using Seeking Alpha to analyze the fundamentals of Palo Alto networks. And this is really helpful because Seeking Alpha really breaks things down in a really nice, simple way for everybody from the just starting with fundamental analysis and wanting to learn about a company to the expert. Because one of the other things I really like about this is they have three different analyst opinions on each position. So, for instance, you have the Seeking Alpha analysts. These are just, I believe mostly volunteer people who volunteer to write um, market research on different companies, different sectors, different things like that. Along with, you have your general Wall Street analyst and their consensus position on a stock. And then Seeking Alpha has built a quant model. It's based on numbers and a couple other, algorithmic things that which they come up with their overall rating of a company. And they break things down into valuation, growth, profitability, momentum, and revisions. I personally like the quant model because it's really unbiased. It's just about numbers, it's about statistics, and it gives you a straightforward. So I'm going to jump into the earnings on Palo Alto Networks, or PANW is the symbol. They reported on the 20th. They came in with earnings per share normalized to actual, which was $1.46, which would beat the street by 16 cents. Earnings per share GAAP actual was $4.89. It beat the street by $4.38. Pretty big. And then revenue was actually 1.98 billion, beat by $3.55 million. Now, the thing I'm going to jump in here to is one of the earnings per share surprise and estimates by quarter. And what the thing that tanked Palo Alto Networks was not their earnings because they met their earnings expectations, but what they missed on was the earnings call. And that's the cool thing about Seeking Alpha is you can actually go and listen to the earnings call after it's been recorded and replay it and listen to them. Well, they came out and they basically guided lower for the next quarter, and that basically blew their stock up in after markets trading by 20%. I mean, it was like dink, and we'll check out the charts here in a minute. I just wanted to touch on a couple of the technical side of things. But you can see here you have the earnings per share change year over year, consensus, and then the actual. And as you can see in second quarter 2024, earnings per share year over year was 19.33%, which is good. Consensus was a dollar, what, 1.30, and the actual was $1.46 on the earnings per share. So they beat consensus by 16 cents. Their year over year earnings per share change was up 19.33%. But come this quarter, this next quarter, which is their fiscal quarter 3 of 2024, it is projected they will have a year over year of 19.80%, but consensus is estimating that they'll have $1.24 in overall earnings. But as you can see, as we get into the fourth quarter of 2024, you start to see some negative growth. Now, who knows? Because of what I experienced and what my family experienced and 74,000 other people experienced on the AT&T network, and that is a all of a sudden shutdown of your cell phone service. This company is getting more and more inquiries since that event. I believe it was AT&T has reached out to them about analyzing their data, but also I believe it's United Healthcare was one of the other ones as well. So this is one of those things I look at and I go, this is going to be a continuous growth trend when it comes to the overall cyber security, the security of our country, the security of our corporate networks, cloud computing, all that kind of stuff. So as you can see here, from a profitability standpoint, the gross profit margin is about a 74%. The sector alone is 48.82%. The earnings per share before interest and taxes margin was 10.33% versus the sector at 4.94%. So on the evaluation side of things, Palo Alto Networks really is getting a D according to Seeking Alpha. You can see this PE non-GAAP forward earnings is 57.07. Sector is 25.11. Pretty big difference there. Price to earnings ratio or PE ratio on a GAAP forward basis is a 48.17% versus the sector, which is 27.71%, or not percent, but 27.71. So basically what this is saying is you're basically looking at paying out or buying earnings 48 years from today versus the sector is more like 27 years, which is crazy to wrap your brain around. Price to sales looking forward or presently is 12.97. The sector is 2.98. Very high multiple you're basically paying for from a value price to sales standpoint. And then price to book, you're looking at 23.31 versus the sector is 3.13. So you're paying for very rich valuations on this company, which is where they get that big D rating on valuation. On growth, as you can see here, it does pretty well. You're in about the B plus sector. Where it fails is return on equity or return on equity forward growth rate, which is a negative 47.47 versus the sector at negative 4.86%. So they're expecting the return on the equity you put in to be much less than the sector, and they give it a big old fat F. But overall, growth-wise, earnings per share before interest and taxes growth year over year, major, 3,200 something versus the sector at negative, basically 14 basis points. So you can see here growth potential of this company is pretty magnificent. And so that's what I'm looking at there. You can also check out, it gives you basically, Seeking Alpha will give you the different opinions. You see a handful of buys, some holds here overall, but basically the Seeking Alpha analysts overall, I mean, it looks like they like it. You can get in depth and look at this. Look at how these guys are looking at. Then you get the news feed, the whole bit. All right, so let's go over to the technicals because they just they just don't lie. All right, so I'm going to look at 3 time periods: daily, weekly, and monthly. So let's just go out a month and take a look at Palo Alto Networks. And as you can see here, so this is a monthly. Each candlestick here represents a month in time. So this is the month of February of this year, which is a negative month as of, close of business today. But what we see here is something that I really like to pay attention to, and that is this 200 period simple moving average. Going back to May of 17, it came off that. It went up, it hit the top end of the Bollinger Band, it came back down, and just about hit the 200 SMA on November of 2018. Went back up, trailed against that Bollinger Band, went sideways on the 20 for a little bit, and then hit it again back in March of 2020. Well, we all know what happened in March of 2020, right? And then it started moving higher, got above the 20, and then it's basically trailed up against the top end of the Bollinger Band up until March of 2022. So basically 2 years of upward growth. Pretty nice. Came back, went through the 20, came close to the 200, but didn't, but then started moving higher up until this month overall. As you can see, it's pushing up against this Bollinger Band and holding that. So if you just look at the trend of this stock of Palo Alto Networks, you basically had a touch. If you started at March of 20 or November of 2020, it came down, touched the trend, made another trend mark basically in January of 2023. And basically, if we see a pullback, I suspect we'll pull back against near the 20 or against this moving trend line that I've put here on a monthly basis. If I'm looking at it from a weekly, and here's why I'm looking at more longer term, because if you're a longer term investor, one, you're looking for companies that are acquiring more of their what they call it TAM, total area or total area market or all market, whatever it is. But anyways, but you're also wanting stocks that can continue to grow and grow internally as a company. They're going to continue to get stronger. There's going to continue to be a demand for the product. Well, cybersecurity and security in general is going to become more and more a big one for the overall. On a weekly basis, you can see here, this is yellow line is the 200 simple moving average over. And so as you can see here, going back for a very long time, it has only touched the 200. 200 is this yellow. It came down here in March of 2020 and it has only moved higher on a weekly basis. It basically is hugging the top end of the Bollinger Bands and this 20 period moving average, which is the one in orange there. That trend line, I drew this white line here back on the monthly. And as you can see, we're pulling back towards, on a weekly chart, towards that 20 period moving average. And chances are we're now hovering in the 20 period moving weekly average here. If I go to a daily chart, you can see this cliff dive that it took on the 20th after market and then but opened up lower from February 20th. It dropped 20%, hit the 200-day simple moving average, and since then has bounced off. Now, 2 days ago, this is the 27th of February, it hit the 50, went through it, but closed below it. And since then, it is basically closed below it. And what I'm seeing is there's a level of support right there. If you go back into here, this area, there's a bit of a support area. The question is, are we going to hold that? Is this something that is actually going to break through and we'll go down and test this 200 again? My thinking is and belief is that when you have a drop like this, you hit the 200, it sustained it, it moved higher, it hit the 50, it went up, but could not break through it. And if we see this come back down, we'll see this potentially come back down to the 200, which creates an opportunity to buy. So I look at it in three segments. One, the first hit, never buy it. The second hit, definitely consider it. And if it goes back for a third hit and pulls back to the 200 on a third time and holds and starts moving higher, then that is a pretty strong probability it is going to go much higher. The key is it's got to break through this 50 period moving average right now. That's on a daily chart. That's what I'm looking at because that is what is now becoming resistance to it. So take that in account as you invest in this company. If you look at this the low stochastics, you're on a move higher. On the MACD, you're still trending lower until this becomes positive. The histogram becomes positive until the MACD lines cross and go positive. This is a wait, in my opinion, until we see a move test maybe this 200-day simple moving average and then break through this 50 period moving average. I would be cautious if it doesn't come close to the 200 period moving average because then it may be a false breakout and you got to be careful of that. So you want, once you get over the 50 and you get a close above and then a retest within probably the next 2 or 3 days and it holds, then chances are we're headed way higher. And if you're following the Bollinger Band here, you're up over $400 a share.
And one final big endorsement for Palo Alto Networks is Nancy Pelosi bought $1.25 million of call options that should expire in January. Now, if you've been keeping up with her stock picking and option buying, she bought NVIDIA back in, I believe, November, cashed out of that with quite a few dollars in gains in that position. But now she's going after Palo Alto Networks. Now, you got to understand, she may know something because she sits on a lot of these different committees up in Washington. So is this a definite confirmation? Well, it's probably well informed, let's put it that way. So take that into account that our politicians are buying ahead of a lot of these major returns. We've seen it with NVIDIA, we've seen it with a handful of other companies, and now we're seeing it with Palo Alto Networks. So take that into account in your investment strategy. She's looking out 12 months from now. Take that, consider that. But chances are, well, she may just know something.